Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what is happening so far. If you enjoyed the video, as usual, don't forget to hit that like button. It does help a lot. Again, this is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is below if you're interested. $3 a month, where essentially I share my intraday thoughts on Tesla as it's moving throughout the day. Yeah, so if you're interested, the link is below. It's pretty nice. But moving into a Tesla closing the day, pretty much flat. I mean, slightly red. Let me just double check because again, this updates post-market as well. So closing down 0.17%, which compared to the market is a little bit of an outperformance, right? Because QQQ down about 0.8%. So Tesla, pretty nice. But closing at pretty much that 251.5. We're just stuck within this range, man. This is ridiculous. Today was a bit of a bear trap. So yesterday, and well, not really yesterday, more like the day before, this candle right here, and especially this candle, two bull traps. Bear trap, another bear trap today, right? As you can see, both of these candles went well below the 21 EMA, but both got sucked back up. This one just barely closing above. But today's candle, of course, closing pretty much right dead smack center in between the 50-day moving average and the 21 exponential moving average. And the story continues. We are still stuck in here once again between these two bad boys. And yeah, let's talk about it. Let's figure out what happened, right? So the day opened up pretty bearish, right? There was the bearish news regarding Apple in China, how like China is essentially prohibiting Apple products from being used by the government officials, and it seems like it's expanding even more so. Now, that on top of, what else, right? The market itself was just obviously overall red. Tesla, of course, gapped down, right? Had a pretty bearish start. This was actually a very bearish looking candle. This is the first candle, the first like 1 hour candle this morning, right? As market opened for the first 65 minutes. Really bearish candle. I'm not gonna lie. If I was someone that likes to short stocks, I probably would have shorted this. This looks extremely bearish, but it was a bear trap, right? And the reason it looked bearish is because number one, it's an inverted hammer red candle, right, which is bearish. That usually signals that there'll be continued a downtrend, right? But on top of that, we were in this overall ascending, or rather bullish wedge, essentially, right, the yellow lines, and we gapped down below it. We came up, retested it, successfully, I guess, for the bears, really, came back down, and it was looking pretty bearish. We even came up again and started getting smacked back down once again, right? We tested it here, and then we came up again, started retesting here until we finally broke through. But this right here was a pretty bearish take. And if I was a bear, I probably would have entered the short either here if I'm just like a beginner. But more importantly, I probably would have honestly entered right over here. This would have been a pretty prime area to enter because you would assume that this would be a successful retest. And in other words, it would break down again and then continue back downwards and not be able to come back into the channel or into this wedge with a pretty tight stop loss, which is a good thing. That's why you want to short on these opportunities, because if you're wrong, which in this case you would have a pretty tight stop loss on this candle, pretty much halfway up into this candle. So the the loss would be insignificant, I guess, in the greater scheme of things. But anyway, that's just another topic altogether. But the point is a massive bear trap, and then we had a beautiful rally, and then we had a massive fall over here. Is this a real wick? I was unfortunately busy during the last hour. I had a bit of a issue with plumbing in my place. Let me open up here as well. Let me just double check to make sure that's an actual wick, because this looks weird. Yeah, no, that's not what it looked like. See, if you go over here to the 1 hour, maybe something happened post-market, but this wick is a little bit weird. That's not what it actually looked like. It was more like this, right? Which just makes a lot more sense because this is quite a wick. So take that for a grain of salt. Let me refresh this. Maybe it'll update if you refresh it, but this could have been related to aftermarket or something like that. I'm not really sure. Maybe a ghost order, who knows? But it did look something more like this, right? Just to clarify things, I guess, a little bit more clearly. Now, with that being said, of course, right, all in all, the point is the fact that we did close back into this overall wedge, which is important, and the fact that we are still trading essentially kind of sideways, really, overall in this kind of mid, or rather 250s-ish range, right? High 240s, low 250s, like we're just still trading within that range, which is kind of boring, honestly. It's a little bit boring. We're just not really finding a direction. There's just a lot of traps. The only people benefiting off of this are people that are patient or people that are selling options. Otherwise, if you're buying options on these momentums, unless you're extremely good and you really know what you're doing and you're really playing this momentum like almost perfectly, you're going to probably be getting trapped, whether you're a bull and or a bear. So that's important to understand. Now, the most important thing that I really noticed is the fact that, and I mentioned this to my members well over down here. I can't remember where it was. It was one of the posts early. I think it was I think it was this post. Anyway, it was one of these posts here. I think it was this one here then. Yeah, interesting enough, the option flow 4 hours ago, right? I was talking about how the option flow was looking pretty damn good, right? It was starting to flip a little bit more bullish than bearish. And as you can see, I am not full of it. As you can clearly see right here, it's actually even more bullish now compared to when I looked at it when I made that post. A lot less red. Compare this to yesterday's video, right? Yesterday's video, if you look at it, there was pretty much flipped, honestly. It was pretty much the exact opposites in terms of, the red to green circles, which of course indicates bullish and bearish positions or bets, if you will, option flow respectively. There's a little hair flying around now, right? So the fact that, this is happening is a good sign, right? That means the bulls are definitely stepping in. That's probably what gave us this beautiful little, kind of recovery throughout the day. And that's kind of what I was telling the members, right? I was telling how we need to get a recovery. It's really, really important that we get a recovery today so we can, or else it will turn uglier. And thankfully we did get that recovery, which is a great sign to see. Now the question, of course, still lies. What happens next? That's the $1,000,000 question, excuse me, right now. Now, unfortunately, this is one of those times where it's just kind of boring. You really have to be patient and you want to wait for confirmation above or below one of these indicators. And this is why I say confirmation. It's really important because if you're someone that's just too antsy or too impatient, or you're a beginner, you're seeing these kind of candles and you're entering at really bad situations. You're entering at very bad opportunities because you need confirmation. You want to see the candle close below one of these levels. And ideally, you want it to come either, if it closes above the 50-day moving average, come back down to retest it and then enter a bullish position. Or on the flip side, if we close below the 21 EMA, you want to see it come back up to retest the 21 EMA, right? So for instance, it'll look something like this, let's just say. So say, let's pretend it closed below it, right? You'd want to see it, let's say it could do something like this, and then you want it to come back up. This would be the retest right here. Most likely it could be a successful retest, and then we make our way down even further. But this right here is where you'd want to enter the short, for instance, assuming you want to short it, of course, right? Shorting is always risky, but assuming you want to, that's kind of the way you'd want to do it, right? So unless you're waiting for that, some people are probably being antsy and they're entering it incorrectly, and that's something you really want to be careful with. Now, taking a look at the RSI is still looking mediocre, honestly, nothing too obvious in my opinion, right? Nothing too noteworthy. The MACD is starting to slowly descend over here. You can see it is slightly losing momentum, but again, nothing I would really point out to be anything too obvious. The squeeze meter is still not saying anything too vital. No squeezes on its way. We're still kind of, there's not going to be a large move building up like you see with the red dots over here. So nothing really showing there. I mean, it is showing the blue bars, which is showing that there should be more bullish than bearish momentum overall. But, the main thing I look at this indicator for is, of course, the potential squeeze. And then, of course, let me know which potential direction it'll squeeze, which it has in the past, like, for instance, over here, right? When we were kind of squeezing over here, you can see the red dots. And then, of course, it had the bars going downwards, which to me was signaling the fact that there's a much higher chance it'll be a move to the downside on the squeeze than an upside. Unfortunately, we're not seeing anything like that right now. So unfortunately, that indicator is not really going to be showing us a whole lot right now. The volume profile, we've talked about it many times. We're just struggling to get above this high volume area right here around the 250s, 260s, even as high as almost 270, right? A lot of volume up here, so we're definitely struggling to get past that. And in all honesty, it really just depends on what cracks first. Do we crack above this volume and then turn this volume into a support? Or is this going to just consistently be a resistance with the 50-day moving average, and then eventually we'll crack below the 21 EMA, and especially the 240s rather for Tesla, which then, of course, we enter back into this low volume territory, and you can see what happened there, right? Pretty massive sell-off in a very short amount of time, right? Just pretty much, if you want to look at it strictly from this crack over here, if you were to enter a short on the crack of 240, it was a nice 10% drop in just a week, really just a week, like a solid 10%. So a lot less of volume down here, and you can see we did bounce pretty much as the volume starts to spike again. This is why you want to pay attention to these kind of indicators. They're not there just for show, right? So that's important to understand as well. We can also take a quick look actually at the short volume and see if it's increasing at all, ever so slightly, but nothing too major at all, in all honesty, from at least what this indicator is telling us right now. So not much to say there as well. So unfortunately, this is one of those days and one of those updates where there's not that much to say because we're really just kind of going sideways here. We're not really finding a direction. The weekly is still looking like it's not really giving up. The bulls aren't fully giving up. The MACD is still looking a little bit more bearish than bullish, but it's not obviously so, in my opinion, right? It's not substantially more bearish than bullish. It looks like it's might even potentially want to cross bullish once again. It's kind of like really like right beside each other, right? It's still a lot of kind of indecision there, it feels like. And yeah, it's in my opinion, again, this is one of those times where it's boring, but patience is important, and really waiting for a confirmation of a break between one of these two major levels is really the play. So that's what I'll be waiting for. That's what I'm telling my members as well. And that's what I suggest. Now, on the flip side, though, if we move over to the SPY, you can see it is below the 21 EMA and below the 50-day moving average, which isn't ideal to see, right? Especially if we open up the 100-day moving average, that is well below us. So that's a little bit concerning. QQQ, we're pretty much doing the exact same thing, just barely above the 21 EMA, but definitely getting rejected by the 50-day moving average. So that's the part I'm personally a little bit unsure about. Not unsure, but a little bit more skeptical, I guess is a better word about. A little bit concerned, if you will, about QQQ and SPY. They're looking a little bit wobbly here. We definitely want to see a bit of a, recovery, let's just say, soon, very soon, maybe ideally tomorrow, above these moving averages, right? Keep in mind, again, September, worst month in the market for Tesla, for SPY, just the market as a whole. So definitely watch out for these two bad boys right here and make sure they're not going to be the thing that will potentially drag Tesla down. But with that being said, that's what I'm seeing as of right now. So let me know what you think. If you enjoyed the video, don't forget to hit that like button, and I'll see you tomorrow. Peace.